Hello, everyone. Welcome to Miles Franklin post-election pre-fiscal Cliff webinar, and I'd like to hand the floor over to Andy Schectman, our president, at this time.
Well, welcome, everyone. Good to have you on board in a reoccurring theme. We're back with another webinar to help disseminate some information and help us all navigate the uncharted waters we find ourselves amidst in. I think it's important, I do this every time, to go over this first slide because it matters. It matters in an industry with no regulation that we have a good reputation. It matters that in an industry with no governmental oversight that we've never had a complaint levied against us in going on 24 years of business. And it matters in an industry where there is very little recourse if a company like mine does wrong by a client. There is very little recourse for that client to do anything. It matters that we've never lost a package and never had a complaint. We're also a company that prides ourselves at providing information, much like what we're doing right now here today. We do twice a day in the form of a newsletter that's free. Obviously, most of you listening to this know that by now. We're proud of our storage facilities in Montreal and in other parts of the world. We feel that they're the best in the industry. We're very thankful to have you here today. We're very thankful that you read our newsletter and follow us and trust us with giving you information to help you navigate these uncharted waters. And there is no better captain to steer the ship than Andy Hoffman, one of the smartest people I've ever met. He's going to give us a tour of the post-election backdrop, and at the end, please ask as many questions as you can. That's the idea here, is to have an open forum for discussion, something that we would be more than willing to answer and entertain as many questions as time permits. So without further ado, thank you very much for joining, and I'll turn it over to Andy Hoffman.
Great. Thank you, Andy, and also thank you for being here. In these trying times, disseminating good information and sharing good information with others is the most valuable tool we have. And this is our webinar that we've done. Basically, we're trying to just give a modicum of commentary about some of the things we see in the world, the markets, and in the bullion business, and then let you ask away questions. And keep in mind that the question and answers are not limited to these webinars. My job, Andy's job, as well as our brokers, are to answer your questions and your decisions as easy as possible. Now, I'm not sure how many repeat people are on this line, but we will be showing the webinar on YouTube, so I'll just briefly talk about my background and Bill Holter's. I am from New York. I was a Wall Street professional for about 20 years. As you could see, I worked at many of the mainstream firms. The longest tenure was at Salomon Smith Barney, where I was a oil field service equity analyst. I left the business in 2005 because I really didn't like the conflicts of interest I saw there. And by then, I was already 3 years fully invested into precious metals. My entire focus, I'd already been writing about it on the side, and I had already been invested there and really wanted to be in silver. And then I worked in the mining business, the actual mining industry, for about 4 years before I finally came across Miles Franklin, which is the job I was born to do. I've been writing under the name Ranting Andy in various forums, probably for 5 to 7 years, depends on what you called me at that time, and now I have the free newsletter every day. Bill Holter, I know because we both were writers on the GAP, Gold Antitrust Action Committee website, as far back as 2003 or 4, and we're fortunate enough to have hired him last year, actually this year, sometime earlier this year, to write full-time for us as well, and I think it's a real credit to our team that he's writing missives nearly every day right now. They usually come out within Schectman's newsletter in the morning, and I am always referencing them to myself. Of course, everything that we put out on our emails is also archived on our website immediately. Okay, basically the theme of this webinar is pre-election and post-election and pre-fiscal cliff. Not that those two events really are going to change the big picture going on, but they're certainly in the news. And yes, they certainly do have some kind of short-term impact. I mean, Democrat versus Republican, or deal or no deal. So I'll just say briefly, as we went into the election, basically we're talking about 2012 in general, but more specifically, the months leading up to the election. Clearly, we've seen a major weakening of global economies. There's really not a single one that can claim that it's been resilient. The U.S. Numbers have been terrible, and the U.S. of course fudges its economic data worse than anyone, and still the numbers have been terrible. Europe in the worst recession, certainly the worst recession since it became the European Union. I think you'd have to go pretty far back to see some of the countries in such dire straits. Japan is a complete basket case. It's very, very sad. The Fukushima nuclear disaster only made things worse. Their demographics are the worst in the planet. Their debt is the worst per capita on the planet. And they're about to elect, if you can believe this, a new liberal Democrat Party that actually wants to print more money than the current Democratic Party. The BRICS have also been a disaster. Brazil and India just announced barely positive GDP. China has been at its worst level of economic activity since they became an economic power 10, 15 years ago. Quantitative easing, of course, we've seen it across the board. A lot of it was politically motivated, like the incredible decision by the Fed to actually announce QE3 on September 13th, less than 2 weeks before the election. Quite amazing. And actually, Japan just did the same thing, not once but twice, with their elections coming up. And of course, in Europe, we had what they called now the OMT, or outright monetary transactions, where they agreed to put more money to buy sovereign bonds. And you've seen basically around the world overt easing of different sorts. We've seen major political changes this year. In France, they voted a socialist who Obama looked like a conservative. He's borderline a communist, and the nation has really started to fall apart economically since. In Greece, by hook or crook, they did manage in June or May, I believe it was, to elect the few people that are pro-austerity, meaning they want to take the bailouts. Of course, if that election were held today, they would lose. And at some point soon, I expect Greece to be a major issue, because they are not going to take those bailouts, and they are going to default on their debt at some point. I would be shocked if 2013 is not that year. As far as Italy, things got so bad that they kicked out the prime minister, and somehow, I'm not sure how they did it, they appointed, not elected, a former Goldman Sachs executive to be the new prime minister, just as we saw in the Bank of England last week, where a former Goldman Sachs guy is now running the Bank of England, a Canadian of all people. And then, of course, in Egypt, where you've had the Muslim Brotherhood taken over, and as you can see today, they chased him out of his residence today. We could have a major war in Egypt, which is very given that Egypt, I believe, is the most populous nation in Africa, and it also happens to be right next to Israel. It's something that bears watching. Of course, the war drums, a lot of that was politically motivated with all the talk between Iran and Israel. Clearly, there are some people within Israel and the United States that believe that we need to do something about Iran, certainly about Syria, and any one of these places could be flashpoints in 2013. Now, as far as the markets have gone, the Dow is up a couple percent, or as I call it, the Dow Jones propaganda average, because its only purpose is to supply imagery that somehow the economy is doing well. It's clearly held up. It's only been up a couple percent despite all that prop. And the only thing that's really enabled them to even get that much is because what I call the surrogate PT, or Apple, has had a very strong year as well. Apple is 20% of the NASDAQ. So when Apple moves, algorithms buy stocks. But now that the election is over, that market stabilization period is coming to an end. By the way, this is a chart, a wonderful chart I was sent, showing what gold has done over the past 4 presidential election years. That goes back to 2000, which coincidentally is the year that the gold bull market started. The 2000, obviously, there wasn't as big a movement in absolute values, but in percentage values, again, it had a really tough time that year. Gold was actually flat in 2000. In 2004, gold was flat, or slight up, maybe a percent or two. 2008, we all know what happened, and of course this year. And yes, some people say that, well, that's just coincidence. It happened to be the time where the markets were doing certain things. that's not the case. There's a very, very clear pattern that goes back even before 2000, if you could believe, about election years and the all-important real money. Okay, so now the election's over. So what's going that's any different? Economically, I don't see any changes in the economy around the world. The only thing I've seen is a renewed amount of propaganda in the United States where I see that word recovery showing up constantly. Recovery, recovery, recovery. We've now been seeing the word recovery for at least 4 years. And if you know, for who doesn't believe the numbers going back further, it goes back all the way till, you know, the economy truly in the year 2000. Every day we see something that says recovery, but then you see a report like ISM manufacturing number, which contracted to 49, meaning recession. In fact, it was the worst print in the last 3 or 4 years. And anyone watching data on a regular basis sees for every time that the mainstream media writes the word recovery, you could find 2 instances of these prints that are the worst since 2009 or 2008. Clearly, the U.S. is in terrible shape. And if you look at, for instance, the GDP number for last quarter, the 2.7%, it turns out it was all government spending. That is, the government printed money and spent money going into elections so that they could print a positive number. But the underlying data doesn't show that, the hard data of what's really going on, debt, employment, all that stuff. Japan is in such dire straits right now. As I said, they're talking about a new QE measure right after the election, though they've just had 2. Europe, I just read a thing today showing how their car sales have dropped something like 20% year over year, and every nation in Europe is now either contracting or close to it, and all of, again, the hard data is showing recession. And as far as the BRICS go, India reported 2 days ago their lowest GDP growth in the past 3 or 4 years. They also, one of the few nations that actually publishes a real inflation rate, published 8% inflation. So they are at a negative real clip. And Brazil shocked everyone by reporting less than 1% GDP growth when everyone thought it was going to be 2%. As far as quantitating, well, now that the election's over, a lot of the talk seems to quiet down, at least the talk that's published in the newspapers. But as I said, Japan is going whole hog. I mean, there's nothing that's being written about what they plan to do. I wrote other regions likely, but timing uncertain. And sure enough, this morning, Australia, which is one of these nations that likes to believe is in such fantastic financial shape, they're conservative, it turns out they lowered their interest rates to 3% today, which is the lowest since back in 08, 09. As far as the United States, I mean, they've already made their position very clear by taking interest rates to 0 and stating they'll stay there until at least 2015. In fact, Vice Chairman Yellen, who's probably going to take for Bernanke, just hinted it should be 2016. Plus, they just announced QE3 only 2 months ago. Fact is, just yesterday alone, 3 separate Fed governors endorsed further QE. And remember, Operation Twist, which is separate from QE, Operation Twist means selling short-term bonds and buying long-term bonds. That is scheduled to end at year-end, so they're going to have to make a decision. And most people believe that they are going to either convert it completely into QE or some other type of measure. They're talking about all kinds of other ways to say QE, which is not really QE, and I think they're going to have to do it. As far as Europe goes, it's really a conundrum to me because, like I said, this is the worst. Right now we're seeing the worst economic numbers in Europe that we've seen yet. And yet somehow there's kind of this mass media discussion, kind of understanding that things are going to improve, and I don't understand it. They just bailed Greece out this week, even though the Greek people said we're not going to obey your austerity terms, and yet no one seems to complain about that. In Spain, Italy, all things, France, I mean, no matter where you go, things are bad, and I really just can't see a new fresh point somewhere in Europe in early 2013. Now, additional political changes, I can't say that I know the entire European election schedule, though I'm not aware of any of the major nations having a scheduled presidential election. We do know that the Chinese government just officially changed. I don't call it election because they really have, it's really internal within the Communist Party. They're trying to put out some propaganda about an improving economy, even though, again, the hard numbers don't work. And to me, it's just all the noise in between the changeover of the government. Basically, you have a nation of 1.3 or 1.5 billion people that are run by a committee of 20 or 30 Very few know what they're doing. They, like the Western government, just playing defense, trying to do what it will take to keep as many people from getting unhappy about the true state of the economy as possible. In Japan, again, major election going on December 16th. The current party is expected to lose to the rival party, and the rival party wants even more QE. And of course, the most important political change, which is part of the reason for this call, is what we experienced in the United States just a month ago, which I've written many rants about. This is a major event for the United States. Basically, if you don't assume that there's any kind of rigging of the votes, which I mean, I don't believe that that's the case. I believe there's popular support for socialism in this country. I go back to when Bill Clinton in 1992, his campaign first initiated the term, "It's the economy, stupid." And that essentially meant, look, the economy is doing poorly under Bush, so you should vote for me. And since that time, essentially any election where you've had a bad economy, including the last two, that's been the rallying cry of the minority party. Well, this time around things are different because the fundamental, the structural unemployment is so bad, the debt loads are so bad, that I think people are starting to embrace socialism because of a lack of hope. And I think that loud and clear, you saw this in this election. And now that Obama no longer has well, he said he will have flexibility after this election. Well, he now has it because he doesn't need to be reelected. And I believe you're going to see major socialist policies being implemented in this nation very quickly, starting with Obamacare and the raising taxes on the rich. And it's pretty scary because, again, socialism it can only be paid for by money printing. So we're going to see even more money printing going forward. As far as war drums, it's really hard because it changes to tell because it changes every day. Only a month ago, you really saw some heated rhetoric between Iran and Israel. Then it got quiet again. Then you saw some actual bombings between Hamas and Israel on the Gaza Strip, and that quieted down. And now you have what's going on in Egypt, all in the same area of the world. So, I mean, I'm not going to predict anything, but I do know that historically during bad times, war has been used as a distraction. And frankly, in this part of the world, I don't think we need a distraction. There's so much hatred. And the second part of this call is this fiscal cliff, which will go along with the debt ceiling. The debt ceiling will be breached within a matter of weeks. I mean, probably Geithner and crew will do what they did last time. They'll start borrowing from federal pension funds to buy them speaks, but by January it'll be breached, and therefore this whole issue has to be resolved by then, particularly because this theoretical fiscal cliff goes into effect on January 1st. So, it's interesting timing, being that it's Christmas and the new Congress is probably going to be going to a holiday soon. They're going to have to make some big decisions soon. But just to explain what this means, because it's so sickening, I have to hear this term fiscal cliff every 2 minutes, and most people don't even know what it is. Frankly, I don't think most of the news know what it is. They just know they're supposed to say it and that it's going to end, it's going to start at year end. And basically what it means is, last year, I'm sure everyone in this call remembers, in August, we ran over the debt ceiling. So Congress got together and raised the debt ceiling by $2.1 trillion. Of course, before that time, they said yes, but we're going to cut spending so that we can pay. If you remember, they created what they called a super committee. It was a supposed bipartisan committee to create all these spending cuts, and they created zero. Not a single cut came out of that. So behind the scenes, no one even realized what they did. They created the Budget Control Act, which said, okay, we're not going to do anything now, but after the election, then there's going to be mandatory spending cuts, meaning January 1st, 2013. Now, these mandatory cuts are a pittance. We're talking about $200 billion a year, which is nothing when you're talking about a deficit of between $1 trillion and $1.5 trillion and growing. But that said, in an economy this bad, with this bad unemployment, if you cut anything, it's going to be felt deeply immediately. So anyway, these cuts are scheduled to hit on January 1st, 2013, $200 billion a year. And then, of course, you have these Bush tax cuts, which are also scheduled to end January 1st, 2013. It's estimated that $400 billion of tax revenues would be increased by the end of these tax cuts, which means $400 billion less to a very weak economy. It up, and theoretically that should cut $600 billion out of next year's deficit. Of course, if they do that, my guess is tax receipts will plummet, so it would probably be somewhat less than that. But that's the numbers. I mean, $600 billion at 1 to 1.5 trillion, still a drop in the bucket, but as far as the short-term impact, it will be material. Now, then we have the debt ceiling, which is also going to be breached at the same time. So, right now what they've been talking about is actually getting rid of the debt ceiling, which I believe is the ultimate in hyperinflationary announcement. I believe they're going to do that. I find it hard. They're actually going to go through these ridiculous cuts and just say, oh, we'll move the debt ceiling up another $2 trillion. I think that they're going to create some way to either make it go up a lot more than that or to get rid of it, and that's a major flashpoint. I can't believe they're actually going to get all this stuff done by the holidays, but that's what the whole world is looking at. So we will see. I'm not going to guess what they'll do, but remember, when you hear them talk about a deal, it says here in the last bullet, the only deals to be negotiated, a deal would be that they reduce the spending cuts, keep the Bush tax cuts. No deals are going to make things worse. They're going to make things supposedly, but again, the only way to pay for those things is with printing money. And then the last thing I have here is market destabilization. I wrote this last week. I wrote strengthening PM prices, and then now we've had three major cartel paper raids in the last 5 days. So the price of gold is back to where it was just before the 11th. But if you look at all the other currencies in the world, twice in the last month, Indian rupee gold hit an all-time high. I call that the world's most important market, along with Euro gold, which also hit an all-time high once last month. But again, the cartel is very worried about all these things. It's not just U.S. dollar gold they're worried about. They're worried that Europeans are going to get scared. So anytime you see Euro gold hit an all-time high, amazingly, the Euro just jumped up the next day, and that's happened twice to the rupee. So again, they're trying to manage a lot of things in this arena because sentiment is weak. Again, you see the equity markets are not like they were before the election. You've seen a lot of major down days, both in the United States and Europe. You've seen sovereign bonds all over the place. And, of course, Apple and Google, the two most important stabilizing surrogate PPD stocks, have been falling. So it's making it a lot of things in front of these holidays look shaky. I am going to hand it. Oh, sorry, I had one more slide. And I wanted to reiterate that everything that we've seen, the fundamentals over the past 10 years, in my opinion, from a fundamental standpoint, I have never been more bullish about physical gold, silver, or should I say, I've never been more bearish about the paper currencies that they're priced in. And you also have the seasonals here. You see that December tends to be a good month, although seasonals are not always as important as some of the other factors. And anyone who's into technicals, both gold and silver have formed massive handle formations over the entire year. And let me just give a little commentary on that. If anyone who reads me knows that I am very, very much against short-term technical analysis because it's manipulated. However, the problem with this manipulation is it creates these long-term formations. For instance, if you're trying to cap something for an entire year, like the gold cartel has been at 1800, you create these massive, massive resistance levels, such as 1800. And then when it breaks out, it becomes massive support. And it's not a coincidence that you see these reverse head and shoulders bottoms, like we saw in Eurogold before it broke out, and now like we're seeing this cup and handle in both silver and gold. So, the big question is, can the cartel postpone the inevitable? I don't know. I mean, 2013 could be the year they lose control. Maybe it's 2014, but it's not like it's something way in the future, and we have no idea what event will cause it, whether it's something we're looking at right now or a black swan. And now I'll hand it over to Andy Schectman.
I think we want to talk about this slide just to underscore how things are going in the industry and use our company perhaps as a proxy for demand in the industry. The revenues of Miles Franklin were fantastic. We couldn't be happier. We will finish on par with, maybe, hopefully, even slightly better than we did last year. in a period of time where there's a decline in industry volume and a major decline coming out of the United States Mint in sales year over year. The demand is shifting, definitely, and the short-term price movements, as far as I'm concerned, have very little to do with the overall demand. People are growing wise, and to the fact that buying gold and silver in this market is more akin to identifying the flow of the river. And if you can hold on well enough to the raft, it doesn't matter if you go over some rapids or have twists and turns. As long as you can hold on to the raft, the primary trend or the flow will carry you to the delta. The demand for our Canadian Brinks program is something that we're very excited about, and we think it's the finest program in the industry, bar none. Not only do we feel it from a standpoint of the institution, Brinks itself, we feel it from a standpoint of the country in which it is domiciled, a close North American proximity, a country that is self-sufficient, flush with natural resources, and one that has shown perhaps less propensity to kowtow to U.S. interests than many would think, in my opinion, evidenced by the Royal Bank of Canada selling their branches here in the States to a U.S.-based company. The way that we charge for the Brinks program is what is setting us apart from all others. The standard storage fee in this industry is 0.75% of asset value. And the way that we charge is by per ounce. For at least the next 3 years, as we've just signed a contract, at $1 per ounce per month in gold and 3.5 cents per month in silver. So when we look at the Brinks program, which is by far our most sought-after item in our company right now, we feel it stacks up to every other storage facility much, much more favorably in just about every single category. We're very proud to now have a third-party auditor joining, along with our 4 audits per year, segregated 100% and insured by Lloyd's of London. If you're looking to store gold you already own, you need not purchase from us. You can send your product that you already own with our assistance up to Brinks Montreal. There is no finer storage facility in the industry. In terms of new initiatives, we are adding numerous strategic partners in 2012 and hope to here in 2013 financial advisories, people selling product for us through their own source and making commission. Of course, if this is something you're interested in, we'd have to see a resume. You'd want to probably give me a call directly. The name Miles Franklin is something we're very, very proud of and take very, very seriously. And the reputation that we built is something that is perhaps the most important thing in my life. So when it comes to interest in perhaps developing an affiliate relationship, give us a call, let us get to know you, send us a resume, and we can do that. The relationship with BFI Consulting in Zurich is something we're also very excited about. As mentioned, we have worked with them since the very, very beginning, helping people obtain products in Switzerland. The finest people I know in the industry, and if you're interested, check out their website, bficonsulting.com, or give us a call, and we can help you and be your U.S. liaison. And as far as being a protection provider, we mean that. We don't just sell gold. We show you ways to store it safely. We show you ways to protect your money and other assets and other forms outside the United States borders. We have affiliation with MRI Depot. Prepare yourself for things that could go wrong down the road. And really, on a side note, that's not too crazy. I have a friend who lives in Staten Island, not too far from where Andy grew up, and he told me when the hurricane hit here just recently, within a few days, there was no food, no gas, no electricity, houses were leveled. Stranger things have happened. So preparing yourself financially, preparing yourself with food, with water, can't hurt. And we have a new partnership with MRI Depot. You can find it on our website. Not to mention, we try to help prepare with information such as this webinar and the daily newsletters that we put out. And truthfully, we do mean this, that call us and talk with us. You'll never find a company that will spend as much time as we will with you. And we are about earning your business and answering your questions. And if we've done an adequate job of doing so, perhaps business will then follow, but not until. So we're about earning your business and your trust. Certainly thank you for listening, and welcome you to now answer questions. If your question doesn't get answered, feel free to call in and ask for myself or any of the brokers here. You'll be in good hands. But again, thank you very much.
Okay, I'd like to start the question and answer portion of this webinar. The first question I have comes from Ken. If gold and silver became everyday currency, what would that look like, practically speaking, in stores, banks, paying bills, etc.?
Oh, sorry, I got cut off. Can you repeat the question?
Certainly. Can you guys hear me just fine? Okay.
Yes, I'm good now.
The question is, okay, the question is from Ken. If gold and silver became everyday currency, what would that look like, practically speaking, in stores, banks, paying bills, etc.?
Right. Well, I think the way to look at it is not so much, it's not that gold and silver are all of a sudden going to become currency overnight. What's going to happen is you're going to see a mistrust of the current system. That mistrust of the current system will always show first in inflation. And inflation will lead to shortage as companies, as vendors do not want to sell their wares. And then, of course, you have the systemic breakdown as a result. From the ashes, what you're likely to see is first vendors saying, look, we'll sell things, but only for things of real value. That may be, in some cases, bartered goods, and of course, the ultimate good would be physical gold and silver, but that'll take some time. Trust me, if we're talking about a situation where anyone, pretty much anyone, aside from someone like me or Andy, wants to take gold or silver for goods, it means the dollar is probably already collapsed, or other currencies as well. And that's always my answer when people say, well, you know, should I get gold? It could get confiscated, or what would happen in this scenario? I go, look, any of these scenarios you're even dreaming of means that very bad things have already happened, which is why I say every day to protect yourself, because I don't know how it will ultimately end, but I do know that if there's a situation where people are, first of all, the banks will be closed, so they won't be taking gold. Well, they'll be happy to take it, but no one will give it to them. But anyway, these situations mean things are bad, and I don't know how it will end, but I do know that during that transition time, you're going to be very happy if you have real items of value in your hands.
Let me add a little something to that as well. There is another way of looking at this, and that is that perhaps if you Google the new $100 bill and look at the images, the new $100 bill has been made for over 2 years now and hasn't been issued. They're sitting in a vault somewhere in the New York Fed with the explanation that the new linen paper is jammed in the printer, so they're not able to print them fast enough. But if you notice, the front and the back is covered in gold. Now maybe, just maybe, their end game is to squeeze as much juice out of this dollar until the world throws up their arms and says, we've had it. We're looking for something of value to trade us our goods with. And that's when they issue a new gold-backed currency. And maybe that is why guys like Jim Sinclair says gold will reach 5,000 an ounce and will never come back down, as it will be pegged to a new world reserve currency. So gold could take its stage or its role as world reserve currency backer, and we still use paper to transact business, but perhaps now it actually has value rather than the currency right now that is backed by nothing but a printing press and the government's ability to tax.
And the key, of course, is that we don't know what will happen. It is orderly, like Andy says, and maybe it's an overnight black swan event, which is chaos. But the fact is that ultimately the paper currencies will lose all their value, and gold and silver will be reestablished as the real money they've been for thousands of years.
Okay, thank you. Next question comes from Keener. If the price of silver is low at this point, what do you believe it should be? Why would not a bigwig like Admiral Sprott buy as much as he can and set this wheel faster in motion? I understand a person can do with their money as they wish, but cannot someone at least shake the suppression of prices?
Well, First, I'll say that Admiral Sprott has been doing his thing. In fact, he's been doing it more than ever. He's done 3 PSLV deals this year alone. And in fact, if you go back to the other 2 that he's done, every single one of them has resulted in a significant silver price increase. Even this past one, silver jumped up until, look what you've seen the last 3 or 4 days. The point is that, most of the big buyers of silver are kind of scared. No one's going to go on the COMEX and try to do it, and Sprott is not doing that either because no one trusts that the inventory is there. Look, if you have $1 billion, $500 million to spend, you're going to be doing it very carefully so you don't get the bunker hunt treatment, which is you try to buy silver and they change the rules on you. So, look, there is an inexorable rise in the price. It's been up for 12 years. It's very volatile because they are increasing the paper shorting. I'm sure that anyone who saw it today, you can imagine how much paper contracts they threw at it. But the fact is, over the years, every one of these drops has become shallower and has lasted for a shorter period of time because the physical demand comes right in and takes it right back up. Frankly, it is amazing to me how the game is still going. Yes, there is new supply that comes out every year, but most of that supply is taken by industry. And these are industrial uses for the most part, which are indispensable. So, I think you're just going to see a tighter and tighter market until one of these days, maybe it is a Sprott deal that breaks it out. In fact, it was the PSLV IPO, if anyone remembers, in November 2010, which started silver's run from the high 20s to $50, and required the government to actually do that Sunday night massacre and actually pull the old "We killed Bin Laden" thing out of their hat as cover. It was that desperate. So that time will come. Maybe it's in 2013, be soon thereafter. But at some point, there's just too much physical demand to keep the price down. And again, I just put out a piece again. People are buying as much silver in dollars as they are in gold. That's industry-wide, and it's for a year or 2 now. You can't have a 50-to-1 gold to silver ratio when people are buying as much silver as gold.
Okay, thanks. Andy Schectman, anything to add to that, or shall I move on?
I think that was well said. Move on.
All righty. Next question comes from Steve. Can you provide a comparison between the programs with BFI in Switzerland and the Miles Franklin storage program with Brinks in Montreal?
I can do that, sure. The program in Switzerland, and again, let's start with a foundation in a world filled with counterparty risk. That name of institution should mean something right away. And BFI Consulting is as fine of a company as I've ever worked with in all of my experiences in business, from top to bottom. They don't get to be better. And their program is as good as it gets if you want to go to Switzerland or you want to go to Hong Kong and perhaps soon Singapore. However, their programs differ in the following. Number one, sending your own product to Switzerland or Hong Kong is incredibly expensive, plus they charge a very large assay fee to do that in Switzerland, and by extension, Hong Kong. In Switzerland, money laundering is a big topic, with it being known as a world hub for privacy, at least it used to be. And when they receive gold and silver, it doesn't carry any ownership attached to it as a security would. Therefore, they have to do all sorts of due diligence and assay the stuff and charge a really what I think is too high of a fee to send your own product. Coupled with the extraordinary expensive mailing costs, it's just not a great idea to send your own stuff. In terms of the difference in paperwork, there's a lot more paperwork involved with the program in Switzerland. You're buying your product in Switzerland and sending it. It is being sent directly from there. So there are differences with the Brinks program. Oh, and also you're being charged on a percentage of asset value. So, I mean, the bottom line is this. If you want to get your money into Switzerland, Global Gold program is as good as it gets. If you want to get your money in Hong Kong, it's as good as it gets. But really, quite honestly, it doesn't compare too much to the merits of Brinks. I happen to think the Brinks program for people living in the United States if you don't want to be, across the Atlantic Ocean, is the best place to be for proximity, for reputation or name, for security, for the way that the fee structure. As far as I'm concerned, it really doesn't get better. Perhaps I'm biased, as I've been involved in every audit that we've done over the past year, and the building itself is the closest thing I can say to it is it's like a prison. The walls are incredibly thick, and it's surrounded by razor wire and 30 or 40 guards carrying shotguns, and it's very serious in there. And they have 5 or 6 level 5 or 6 grade military vaults, and it's when you walk in this building, if you're claustrophobic, you're gasping for air in about 10 seconds. So it's the real deal, and I just think it's hard to compare with anything I've ever been involved with, including the BFI program, which is a good one, but in my opinion, not for everybody unless you want to get out of the country, across the Atlantic.
Thank you. Next question actually was called in just the other day. The question is, what do you do if you have physical possession of your precious metals, you keep them at home, and you go out of the country for an extended period of time, say for over a month? They're unguarded. How do you suggest to secure them? And they were also asking, is it legal to take the metals out of the country, and what are the logistics for that?
As far as taking gold, as far as taking gold out of the as far as taking gold out of the country, it is for the purposes of international travel, especially if you're going to Canada or Western Europe. It's legal tender face value that matters, and I have verified this on several occasions as I travel with gold frequently out of the country. It is the face value that is used for the purposes of travel. In other words, U.S. Gold Eagle or Buffalo, Canadian Maple Leaf, Australian Kangaroo, they're all $50 face value 1-ounce coins. So on your person, in your carry-on, you could take 199 ounces of gold as long as they're legal tender face value coins, and go into Canada without declaration and not be in violation of customs law whatsoever. So that is not something you'd want to try to Mexico or South America or to Asia, but to Canada or Western Europe, it's not a problem at all. And as far as hiding your gold and silver, well, there's a myriad of places you can choose, but $100,000 worth of gold you can fit very easily in a woman's purse or in a shoebox, and lots of places that you can hide this. Could always put it in a safe deposit box for a short period of time as an option, something I'm not a huge fan of, but if you're going to be gone for an extended period of time, you could do that. You could choose one of our storage facilities. The bottom line is it's not too hard to hide this. Silver is a different question, different animal. There really is no way to hide a large amount of silver. You get a gun safe, you get an alarm system, and the logistics of silver are such that you rarely see someone running down the street with all your silver. So get an alarm system and a gun safe, and that's the best you can do with a big amount of silver if you're not storing it somewhere.
Yeah, and I'd like to add, because again, we talk a lot about the Brinks program, but we're not trying to tell everyone that they should put their metals there. It's only for people who it really applies to. And what I say to everyone who asks me this question is, I would bet that probably 98% of the people in the world that own gold and or silver own it on their person. It may be in the form of jewelry, it may be in the form of a few coins, or it may be in the form of just enough coins that you can keep it at home. Because look, ultimately it's the safest thing to do. Have it, be very quiet about it, don't tell anyone, hide it in a nice safe, protect it, and theoretically you should be fine. But again, like the questioner asked, there are 2% of the people who obviously own more than 2% of the actual gold and silver who have other things to think about. And like the person asked, if you happen to be a renter, meaning there is a chance you could lose your house, or if you're an expatriate, or if you're someone who travels, or if you're a high-profile person, or if you're in a bad neighborhood, or just or you don't have a big enough space in your house, or you plan to be mobile, you may want to move, and you don't want to try to move 100,000 ounces of silver. For those people, it makes sense to use a storage facility. And then, of course, you have to go into the thought process that Andy just described about why would you want to be in Canada or Switzerland or Hong Kong. These are major decisions because part of it is just about having it secure, but part of it is thinking to the future when you might want to get it back or give it to someone else.
Thank you.
Next question.
Next question comes from Simeon. If Greece were to go back to the drachma, would they need to back up the new currency with gold or silver? And how do you envision them going about that?
Well, if Greece goes back to the drachma, backing it is going to be the least of their worries. They're going to have hyperinflation or some sort of very major inflation. They already have the worst unemployment rate in Europe. It will become dramatically worse as all the other as they default on their debt and all the other nations shun them as a trading partner. So I would expect you'd see cash there first, and then you'd have to, as they say, rise from the ashes with a new system. Now, they supposedly have something like 100, 150 tons of gold, which really it isn't much, and some people say that they've already leased it or they've given it away as part of their austerity. So I'm not sure they have much gold. If they don't, they're not going to have any money to buy it for many years to come. So I mean, that's why it's so important that people realize that just because the mass media tries to put out stuff like, oh yeah, Greece is bailed out, blah blah, they're not bailed out. Every bailout just makes the situation worse. The people are revolting at some point. If they had an election today, that they would cancel the bailout and they would default and do exactly what the questioner asked. So it's a very, very scary situation, not just in Greece, in much of Europe, but right now Greece is by far the number one most likely flashpoint.
Thank you. Another one this came up from a release that Wealthwire sent out. They sent out a release that says there's a conspiracy to make gold a new currency on January 1st, 2013. Central banks and governments are buying gold by the metric ton. Everything from savings and loans to mortgages to your personal investments will be impacted. A reader is asking, what are your thoughts on this release that Wealthwire sent out to its subscribers?
Well, because I happen to be someone who speaks of the gold manipulation, I get a lot of questions about various conspiracies, some of which have nothing to do with the financial markets. This one obviously does. And again, everything that I write about with gold manipulation is backed by fact. So I'm a scientist when it comes to finance, and I'm an analyst by nature. And anything that I'm talking about is nothing that's supposition. It's fact or it's backed up by some other source that's credible. Now, what this question is talking about, I'm not even sure about this particular one, but there's so many things out there about what's going to happen January 1st, let alone the stuff out there like the Fiscal Cliff and the tax cuts, and now the Basel III. Are they going to announce the Basel III banking regulations that make gold a Tier 1 asset? And now that the election is here, what is going to happen on January 1st, let alone what's going to happen on December 21st if the world even survives past the end of the Mayan calendar. So what I would say when it comes to conspiracies, I shouldn't say conspiracy. When it comes to any kind of things like that, unless there's some real proof behind it, I would ignore it. However, general trend is for bad things to happen, whether it's socially, politically, or economically. Me personally, I don't believe there's a chance in hell that there's going to be some kind of organized change, like they know it's happening and they're going to announce one day that there's a new gold-backed currency. I think the markets will force it on them. Then they'll have to work defensively. That's my personal belief. I don't believe that there's any group in the world powerful enough to orchestrate the moves of billions of people, especially when you're talking about all of these currencies that have been overprinted and hyperinflated.
Thank you. Next question has to do with rolling over an IRA into physical precious metals. We get this question just about every day from callers. How do you invest in precious metals through your IRA? And they're wondering, how do you address not taking physical possession?
You can open up an account with several custodians, Gold Star Trust or Sterling Trust, and that is a traditional IRA custodian that does allow for gold ownership. When you set up the IRA, you can allow for distribution of your gold, whether it be a mandatory distribution when you're 70.5 or a voluntary distribution anytime, you can actually take distribution of the metal. It's called an in-kind distribution. So it's a neat program if you believe enough in the investment in precious metals to have it in your IRA. The ability to actually physically take possession of it through distribution is pretty cool. And then, of course, if you want to have the best of both worlds, what you could do, and again, I'm not an expert on taxes by any means, and this program, it seems to work. There are a lot of people who do it. I can't quite wrap my mind around it, but suffice it to say, there's a program called Passport IRA, and as far as I can tell, they're very legitimate. They're at the conferences that I speak at, most of which you're background checked before you're able to go there. And the Passport IRA is it's a company that establishes an LLC for you. And the LLC becomes the owner of the IRA and you the owner of the LLC. In that setup, you can actually become your own custodian. So you open up an account with Passport IRA for about $2,000, I think it is. They establish an LLC for you. The LLC then becomes the owner of your IRA, you the owner of the LLC, and then you purchase physical precious metals, and it actually gets sent wherever you want it, to you, to a depository of your choice, your safe deposit box, and even with a little bit of twisting and turning to Canada, to Brinks Montreal, which is a separate question all unto itself. But bottom line is, it is possible. You can do it traditionally through Gold Star or Sterling. It's held at a depository like Diamond State Depository or Delaware Depository, and then through distribution, whether it be mandatory or voluntary. And voluntary would be even if you're underage. You can, if you're not 59.5, you can still take an in-kind distribution where they would send you your metal, but you pay a fee of 10%, a tax, 10% penalty, if you will, along with regular income tax. So anyways, you can do it traditionally that way or through Passport or Checkbook IRA. They both do the LLC. So that is the way to do it. Next question.
Okay, we have time for just one more question here. We'll keep it a simple one. Keener is asking, Ranting Andy says never to sell your precious metals. What does one do with their metals? Do they use them as collateral? Not sure why to sell.
Okay, well, I don't think I ever said to never sell them. Look, I mean, the fact is gold and silver are money, to be used as money. Now, ultimately, the goal is to be able to save them until they realize their full value, which would be when there's a new monetary system that they're linked to, which, I believe in current purchasing power would be at least $15,000 to $20,000 an ounce, and that number goes up with every dollar printed. But they, again, will need to spend money on things. I mean, if you need to buy a house or pay a medical bill, then you have to sell it. It is money. It's not necessarily something that's never to be sold. Again, what I'm saying is it's preferable to hold on to it until the paper system ends, which could be next year, it could be 5 years. You really don't know, because it will keep appreciating in value against fiat currencies.
Andy Schectman, anything to add to that?
Nope, I think that was well said.
Okay, excellent. I think that wraps up our question and answer session for today. And if any of you have any closing comments, feel free.
I'd just like to say thank you for listening, for reading, for giving us an opportunity to work with you. If anyone ever is looking to talk with me personally, I'm always available. Please feel free to call directly, 800-255-1129 directly to me, or email me at Andy@MilesFranklin. I'm always happy to help any way that I can. Andy Hoffman, anything for you?
Yes, again, number one is to protect yourself, and not just financially, just to consider what the worst case scenario would be and prepare for it, because you never know what might happen. And again, my job is to answer questions for you. No matter what form they come or what they're about, just give me a call, send me an email. I'm happy to respond.
Okay, thank you everyone for attending. If you have any questions, you can call our main line at 800-822-8080 or email us at info@milesfranklin.com.